Good afternoon, ladies and gentlemen. Welcome back to the Black Swan Capitalist YouTube channel. Today's a very special one for me. I'm joined by a dear friend, someone I admire deeply, someone whose work has truly shaped my brother and I, our understanding of global finance for many years now, Mr. Andy Schectman, CEO of Miles Franklin Precious Metals. Andy, at this point, your reputation speaks for itself. I could spend half an hour listing all the contributions you've done. But honestly, that would just take a lot of valuable time away from our conversation. So I'll simply say it's just a great pleasure to see you again. It's been far too long.
Great to see you too, brother. Congratulations on your new wedding union. Blessings to you and your wife. I could sit and watch that opening for a good 10, 15 minutes. It reminds me of like the opening of a suspenseful movie or something. But it's good to be back. It's good to see you, my man. Thanks for having me.
It's always a pleasure. I actually took my time to create that myself at least 2 years ago because it sets the mood for the
It's
conversation
awesome.
we
I
have
like
here.
it. Yeah.
Yeah.
Well done.
Before-
Well done.
Thanks so much. Before we jump in, I do want to thank you for the beautiful wedding gift you sent us. That really means a lot to us. I'm going to share this with
That's
everybody.
fine.
Just want them to see it. It's a 10-ounce Australian koala.
Yeah.
And you can find these metals at milesfranklinpreciousmetals.com. We'll put the links in the description below. But since you sent this to us, we've seen a massive squeeze in the silver market. So we might as well just start over there. There's clearly been a supply squeeze and a global shift towards accumulating physical assets like silver. So
Yes.
bring us up to speed on what's happening in the silver market right now. Who's really buying this? Why is it tightening? And what signals should people be paying attention to?
You know, since I've been on your show, and I mean, for the last 5, almost 6 years, I've been screaming about the deliveries in particular in London and on the COMEX, but mostly in London. I've been screaming about the central bankers buying gold and silver, but things have really changed, especially, I guess you could say, in silver, and especially here in the United States. Some of the big things that have happened, maybe the biggest thing, is that the United States government has classified silver as a critical mineral. Now, that's a very big deal. In other words, they're putting a floor, a policy floor, a national security floor under the price of silver. And they are acknowledging for the very first time that silver is incredibly important. Now, from a standpoint of what's interesting about that is that it's been the Western banks, 8 of them, half in the United States, half in Europe, roughly, that have held down or maintained the largest concentrated short position on COMEX in the history of the exchange in any of the 1,000 commodities traded in silver. Now, that's been going on for years, and I have my own beliefs behind it. I believe it is the military-industrial complex who rules the world through high-tech military components and the need for copious amounts of silver to make these components to sell to the Western governments around the world to rule the world, as they have for a very long time with very, very strong militaries. They are the ones that I think have been behind. The question is, why would 8 banks have the largest concentrated short position for years and years and years? JP Morgan, the custodian of the world's largest silver trust, SLV, paid the largest fine the Justice Department ever handed out for manipulating the market, metals market, yet they're still allowed to be the custodian with BlackRock of the world's largest silver trust. Who is a military industrial complex? Well, I would argue it's BlackRock. They own the majority of all the military manufacturing companies. And when countries like the Ukraine get destroyed, they're the ones that come in with the missiles that we build for many of the countries around the world. They're the ones that get the reconstruction contract. I will move away from that a little bit, but just to set the stage, so far this year, almost 13,000 tons, probably after the last 3 days, which was the December delivery, which started 3 days ago. About 13,000 tons have stood for delivery. And that exceeds the combined output of the 3 largest producers in the world, Mexico, China, and Peru. And, you know, this is not a small deal. You take a look at the amount of silver in London. They started with 1.18 billion ounces of silver call it 2021, it's down to 790 million ounces. But of that 790 million ounces, only 140 million are available for delivery. The other 550 belong to the ETFs, in particular SLV. What's interesting about that is that there is 2 billion ounces in contracts that are outstanding that could stand for delivery. So what could go wrong, possibly go wrong with 2 billion ounces in spot contracts that could stand for delivery already out there, backed by 140 million ounces of free float? This might be why the LBMA, in regards to silver, which is the oldest silver market in the world, the London Bullion Metals Association, 140 years old, they are a T+1 settlement. T Monday, +1 Tuesday, Wednesday, the bars should be moving to you. You and your brother own a massive jewelry conglomerate, and you manufacture jewelry all around the world and sell it all around the world. So you have contracts in London. You need your gold and your silver to make your jewelry. And so you and your brother say, yeah, we need to get to take delivery of a bunch of stuff here. Let's do it. And they call you up and say, guys, I'm sorry. I know you're expecting your bars in 3 days, but there's a shortage of manpower in trucks in London at the Bank of England. We are about 8 weeks backordered. Really, that's how that works. So you're beginning to see this. We saw something similar but different Thanksgiving night, where the next day, the 29th, is the first day of delivery for the December contract. There is rumor that somebody, this is a rumor, tried to purchase and stand for delivery on $40 billion worth of silver, and bang, they shut down the CME, the COMEX, at 10 or 11 o'clock at night on Friday night, Thursday night, Thanksgiving night. Now, there's no volume going through these servers at this point, right? But the server center in Illinois evidently overheated just in the metals side of things. They have servers for all other markets that are controlled in the CME group, Forex and currencies and equities. Those are fine. But the servers, which have double and triple redundancy for air conditioning if they overheat, double and triple and quadruple, well, those specific servers just for the metals market on Thanksgiving night, when there is no volume, everyone's eating dinner, they overheated and shut down for 12 hours. Things are beginning to break within the system, and they're beginning to break because no one ever stood for delivery, Versan. No one ever did, less than 1%. And now everyone is standing for delivery. It is the Achilles heel of the system. People would roll it over. They would take cash settlement. They would use it to speculate. Now they're saying, nah, no, I want delivery. In the first 2 days of the December delivery month, the first day we saw 23,970 gold contracts, which is 2.397 million ounces. First day we saw 8,305 silver contracts. Now the gold contracts are 100 ounces a piece, so that's 2.4 million ounces of gold at $4,000 a piece plus, and 8,305 silver contracts, which is 41,525 million troy ounces of silver issued and stopped. That was day one, just day one. And by day two, we saw day two, 2.397 million ounces of gold, 41.525 million ounces of silver stopped and issued. That means delivered. It's happening every day. Every single month since November of last year, when Trump won the election, we have seen these kinds of numbers. Massive, massive, massive. Hundreds of billions of dollars worth of gold and silver have come into the COMEX since November. Now, no one's asking who's doing this, who's taking possession of this kind of volume. So things are changing. And I guess I would simply say this. You have the most well-funded and, more importantly, well-informed traders that have done this going on 5 years, the central banks that are now, it's transitioning into the commercial banks, and it's transitioning into the most sophisticated traders here on Wall Street. One last thing, and I'll shut up. One thing that I've never seen before, ever, never, right? When you talk about what's happening in metals, I have never seen this before. My whole career will be 36 years in February. No one has ever on Wall Street acknowledged gold. Never.
Mm.
And when I say gold, I mean silver too. But they never did. And you would get some advice. Edward Jones guy would say, fine, put 5% of your assets in gold. Fine. Well, three things that I can point to that I'm blown away by. Now, the three things I'm going to mention, these people are talking to the people way up here. They're talking to the people bringing the metal into the COMEX. Number one, the chief financial officer for Morgan Stanley. Now, I have an account at Morgan Stanley, and the guy's a very good friend of mine. And he's one of the biggest money managers in the United States. He manages over $4 billion in Morgan Stanley. Wouldn't know a gold coin if it fell on his foot. But their chief investment officer just came out and publicly said the 60-40 mantra platform that Wall Street has used for the last 50 years is broken. And that would be 60% stock, 40% bond. You retire, you're 55, 60 years old, you're going to retire. They'd say put 60 in stock, 40 in bond. We'll manage it for you. Go have fun. Go play golf. And you would do well. Now he said it's broken. Sell half your bonds, put 20% in metals, 60, 20, 20. Michael Hartnett, the chief analyst at Bank of America, whose newsletter is north of 10 grand and goes to the institutional traders. He says, no, that's not right either. 25, 25, 25, 25. 25 stock, bond, short-term treasuries, metals. And maybe the biggest one of all is Jeffrey Gundlach, the bond king. Yep. He is known as the bond king, the antithesis of gold, an asset that pays interest, made his living and his reputation, and is called the bond king. He says 25% gold is not overweight. So you have at the very highest level a change of massive institutional investors here in the United States bringing it into the COMEX and don't tell anyone about it. No one talks about it. Where's the journalistic integrity in the mainstream saying, what the hell is happening on COMEX? My God, never happened this way before. We're net importers of gold. Never been that way before. Where are the Jim Cramer idiots of the world? Where are the people who pretend to be analysts who don't do anything? Mm-hmm. And at the same time, you're having the highest level analysts or chief investment officers of multi-billion-dollar commercial banks saying, well, this is where it's going, and sell half of your bond portfolio and buy gold and silver. So things are changing, Versan, in a massive way from the highest level up. Hasn't filtered down to the mainstream yet, but that's the way it always works. The big money is always positioned nicely and comfortably before the people on the street figure it out.
Yeah, you need to anticipate the move before it actually becomes broadcasted to the rest of the world. And to your point, there are so many multiple structural forces, you could say, that are converging all at once. And I found it very interesting what you said about the military-industrial complex. And to touch on that very briefly, it would make sense that they need to suppress the precious metals markets. And it doesn't have to just be silver. It could be a variety of different metals. But silver, because if I'm not mistaken, you reported that they use it for their Tomahawk missiles, and somebody actually confirmed it. Is that correct?
They use it for everything. I mean, yeah, I have a DOD. I gave a speech in Vancouver and said this, and a guy in the audience, he comes up to me and he says, yeah, I work for the Department of Defense, and I almost fell down. I'm like, sorry if I said something I shouldn't have said. He said, no, it's okay. I actually helped design the Patriot and the Tomahawk cruise missile, and I know there's silver in it. And he, I don't know how much. He came back and did confirm it to me the next year. But it's not just, if you go to silverwars.org, they've done a great job of showing how much silver is used in high-tech military. If you go back to, there's a Senate subcommittee. I used to know the number. It was in 1942, 3 or 4, S dot whatever. I can find it, not now, but anyways, back then they said that they need 200 million ounces a year of silver for military applications. It used to be calculated in the supply demand numbers. The Silver Institute used to calculate it. They don't anymore. And when you talk about supply demand numbers, the Silver Institute will tell you we're running on average about a 200 to 300 million ounce shortfall for the last 6 years. This will be year number 6. 1.5 billion ounces short between supply and demand, and military is not in there. And they don't keep it down to make military componentry, because silver would go too high. Silver is a asset that is depleting in nature. Your skin is epidermis. Silver is found in nature in a form called epithermal, right near the surface. The big deposits were found decades ago. Last year, they mined about 850 million ounces. Of that, only about 170 million ounces came from silver miners, specifically. That's it, 20%. The rest come from byproduct mining of other metals altogether, where they stumble across it, have no vested interest in maximizing its price, and sell it to the marketplace a little bit in recycling. Not a lot, because silver is called inelastic. There's like I don't know, a 15th of an ounce in an iPhone or whatever. It doesn't make sense to pull that out, for $6 worth of silver when the cost of labor would be many times that. So it just gets thrown into landfills along with everything else. So gold, it's a different story. But the point of it is it's depleting in nature. It's disappearing. And so it's an issue of being crowded out of the trade. So no, there's nothing to see here. It's just a useless metal of eras gone by. So they suppress it. And you have to ask yourself, not that it is suppressed, and they're pretending to make money on it. But why would they have the largest concentrated short position by 8 Western banks of any commodity ever traded in the history of the COMEX? Why? The why is because it's more important than they're leading on to. And you are seeing that. And the countries that started exploiting it, I talked about this ad nauseum, right? They understood. They weren't, at the time, they had no interest in challenging the West. And even those that did were not coordinated, motivated, sophisticated, or wealthy enough to do it. They are now. And we've seen India take possession of over 800 million ounces of silver in the last 4 or 5 years. China, the second largest producer of silver in the world, is flying all over Latin America, in particular Peru, the number 3 largest producer, and Mexico, the number 1, and buying doré and concentrate, which doré is a bar that the miners would crudely refine 30, 40, 50, 60%, whatever the number is, and then they send it to a refinery to be fully purified. Concentrate is a byproduct sludge of the mining process, like a goo. Well, they're coming in and they'll buy all of that up. They're the second largest producer in the world, and they're flying to Latin America to buy this stuff before it's even called silver, paying double what the West will and shipping it back to refine it themselves. You look at Saudi Arabia, they just bought several $100 million worth out of SLV. And SLV, well, the amount that they bought allows them to stand for delivery. You look at Russia, they're adding it to their strategic stockpile. As a government, no one has ever done that before. So you're beginning to see silver take on a very, very prominent role, and they're standing for delivery. That's part of the reason that the LBMA, which is a T+1 settlement, is T+8 weeks, because it's very obvious that the Bank of England doesn't have enough in the way of trucks or manpower to move your silver for your massive jewelry operation or whatever people need that metal for. And a lot of this happened by the threat of tariffs. We're going to tariff. And so the banks who were lined up west, the U.S. and the European banks, there are some interesting theories out there that maybe Trump is going after the European aristocrats, and he's trying to stick it to the Bank of England and the banks that are very short there. There are a lot of things, Tom Luongo talks about this, that would point to that being true. Now, I'm not saying I believe that. What I'm saying is, if that were the case, Trump says it's all tariffs. So the banks say, listen, we got these short positions on COMEX, Bank of America, JP, Goldman, Citi. Listen, when they go short on COMEX, typically a bank, they will go on paper, which drives the price down. Yep. To offset their books, which doesn't affect the price, they'll go long in London, right? Now their books are neutral. Listen, guys, we need the silver back because of this tariff crap. Don't worry, it'll all flow back like it always does, goes back and forth through something called exchange for physical. We need to write our books. So all this metal comes back, and I've been screaming since December, it ain't tariffs, it's reshoring. Yep. They are reshoring it for a strategic reason. They have screwed those players over there. That's what Tom Luongo would say. He says that the Europeans, in particular, the Bank of England and the old money, that is in essence the Federal Reserve, is behind the election interference back then and the color revolution we lived through, the wokeness and all that crap. He thinks that that's the case. Now, if you take that a step further and look at not only the Bank of England and the LBMA in massive dire straits with supply versus open contracts, also, when he talked about the Jeffrey Epstein files, he specifically named JP Morgan. Trump did just the other day. That's the old money. Now, what is he trying to do? He's trying to issue, in essence, money creation through the issuance of stable coins through who? Yep. The Treasury. Mm-hmm. What did Kennedy try to do? Issue money through the Treasury with silver certificates. Federal Reserve does not like that. JP Morgan is the old money, is the Federal Reserve, in essence, those players behind it. He's challenging. Now take it one step further. We know the LBMA is on the ropes with their silver position. How about this? Let's call silver a critical mineral. That'll really fuck them. Watch what happens now. And now all of a sudden you put a policy floor and a strategic, national strategy, national security floor underneath the price of silver. And and I'm not saying Tom is right. I'm just saying it's very interesting how he is sticking it, if you will, to the Bank of England and to the European banks that are wickedly short in London. And maybe all of that metal that came back, remember they short here and go long there. We need to take that metal back just for a little bit to cover our shorts here in case there's some deliveries. Maybe these banks over here in the West in the United States, maybe they're not so short anymore. But
Right.
those ones over there, you want to talk an existential threat? You want to talk a problem if Deutsche Bank or UBS has a failure to deliver? What happens then? Well, these banks aren't only tied into gold and silver, they're tied into every market on the planet. A systemic chain reaction, contagion, if you will, that could massively bring down. And for people who think this is impossible, I would urge you to watch the video that came out several years ago on Chris Marcus Arcadia Economics YouTube channel. You would Google Chris Marcus Arcadia Economics / Bart Chilton, Chilton. Bart Chilton was the head of the CFTC, the Commodity Future Trading Commission, the commodity police, where he came on to Chris's show and he said to him that Bear Stearns failed largely, not entirely, but largely because they had the world's largest silver short, and silver went from 12 to 21, put him out of business. And that they called Jamie Dimon into, at the time would have been Treasury Secretary Hank Paulson's office with Ben Bernanke and said, Jamie, we need you to take this position. Now, he's saying all of this. This dude is saying all of this. We need you to take the short position. Jamie says, well, guys, I'll do that, but JP Morgan will be in violation of position limits. That's okay, Jamie. Take 90 days, get your house in order, help us out, everybody wins. Cool.
Yeah.
Off he goes. At the end of the time frame, he says, I went into my superior's office, Hank Paulson, and said, not only have they not shortened their short position, they've added to it. They're in violation of our agreement and of antitrust law. They need to be prosecuted. And he said, I was told to back down, Bart. It's a political decision. Now, Bart Chilton died less than 10 days later. I am not saying there's causation there. But what I am saying is that he came out as the head of the CFTC and admitted that an overly large position, short position in silver was the overriding factor for why Bear Stearns failed. Watch it for yourself. Chris Marcus, Arcadia Economics / Bart Chilton. Tell me what you think. The hair on your arms will stand up when you watch it.
Well, I mean, there's no doubt. It's not the first time where people have come out and kind of tried to tell people what's really going on, and then they end up somehow dead or drowned. Same thing happened with somebody who was reporting on the stablecoin Tether, which we can get into here in a bit. As far as stablecoins, I do have questions about that. But going back to metals overall, it's almost like we're seeing all these emerging economies and nations around the world that are kind of dumping U.S. Dollars, de-dollarization. That's still an ongoing trend, and they're building these strategic reserves of physical assets. And just to clarify for the audience, they're looking at real assets, not ETFs, not paper trails, but physical supply. And overall, that I think that would signal that the whole world is kind of heading towards this new, of course, framework where they're looking for a store of value protection and then industrial leverage, you could say, right?
That's exactly right. If you look at the global south, what you see something very interesting, the Shanghai Metals Exchange. Now they're calling it internationalization of the yuan. What I believe is that they don't want to piss off Trump and call it the BRICS. The BRICS thing is quieted down. And there's a lot of things happening under the scenes. And the reason it quieted down, I believe, is because the BIS, Bank of International Settlements, and their innovation hub, who was behind the development of M-Bridge along with China, Hong Kong, Thailand, UAE, and Saudi Arabia, pulled out at the 12th hour after 4 years of developing this technology, saying we can't be involved with any technology that would help any country sidestep Western sanctions. It's as like they just realized Russia was the arm BRICS after 4 years, and they did it in what is very much like espionage, and really pissed off the Chinese and really pissed off the BRICS. So they've done it on their own now, and now it's called just the bridge, which we are now seeing trades going back and forth in central bank digital currencies, settling imbalances in gold. But here's what's interesting: China is trying to, as they call it, internationalize the yuan. And they're doing it through the Shanghai Gold Exchange. The first thing that they said is that the Chinese yuan, digital yuan, is immediately convertible into gold right now through the Shanghai Gold Exchange without having to convert to dollars. They are building out the infrastructure in a series of multi-jurisdictional vaults. The first one was just completed in Hong Kong. What is significant about that? When gold leaves China, it has to leave through Hong Kong. So in this example, China buys oil. The first trade that we just saw was with the United Arab Emirates. Buys oil from the UAE. The UAE sends them their digital currency to purchase, or China sends their digital yuan rather to the UAE to purchase their oil. And now if the UAE doesn't want to hold digital yuan, they can if they want. If not, they can just like that convert it into gold in Hong Kong and take possession. The second vault is under construction right now or in development in Saudi Arabia. And from there, it will go throughout the Belt Road Initiative, a series of multi-jurisdictional vaults throughout the Belt Road. The theory is they will trade in local currencies instead of trading in dollars, which if you look at the value of the dollar, it's being destroyed. You measure it against the dollar index, it's only down 9%. Measured against silver, it's down 100%. Measured against gold, it's down 70%. This year, so this is a trend that's continuing. So they're saying we're trying to internationalize yuan. It's the rails of the BRICS. And all of these vaults through the Belt Road Initiative, which is the largest infrastructure project in human history. It's 75% of human population right now. And through Asia and Africa and South America, they will put vaults, multi-jurisdictional vaults, where everyone can put a little bit of their gold in all of these vaults, trade with one another in their local currencies, which makes them be responsible for their own monetary affairs instead of building our monetary system and going back and forth between intermediary banks in New York, switching currencies. It settles in 7 seconds at a 98% reduction in fees right to the other party, and then they offset any currency or trade imbalances in gold through a series of multi-jurisdictional vaults. This is being done right in front of us. And this, when you talk about de-dollarization, is the very, very beginning of de-dollarization. And in essence, they are using their own currencies instead of dollars, which chips away at the dollar settlement, and ultimately buying gold, which has doubled the performance of the 10-year treasury with no counterparty risk. They can't be sanctioned away from you. You look at it last year, the 10-year was up 4%, 4.5%, gold was up 45%. Look at it this year. The year's almost over, so it's barely at 4. Gold is up 60%. So not only is it destroying the value of the treasury, our fiscal responsibility is so god awful. In the 6 weeks we were shut down as a country, we added 600 billion in debt, a trillion every 100 days. And a trillion seconds ago is 31,688 years ago. Who in their right flipping mind would ever buy a treasury of ours, let alone sell us their oil or anything for dollars, that where we can push a button and have zero fiscal responsibility to destroy the value of the currency right out from underneath it? The world is moving away from it. It truly, truly is.
That's what the stable coins are for.
Yes.
And we'll get into
the
that.
Genius Act. Yeah, the Genius Act, I have my own thoughts about that as well.
I definitely want to get those. But going back to gold, I agree with everything you've been saying, and you've been at this for many years, really setting the stage for this conversation. But to your point, gold is definitely reasserting its role as a neutral collateral, you could say. Not a speculative trade as some people still treat it, not as a hedge, but as a settlement asset beneath a new global architecture.
Exactly.
Right. Yeah. And the thing is, even here on this podcast, for many years, you and I have, and my brother, we've openly talked about how the world was moving towards this hybrid collateral model where you'll have maybe some form of tokenized gold or digital assets that will operate together. Physical gold will remain the base layer and the immutable anchor, you could say, while some sort of neutral digital asset becomes the programmable settlement layer upon it. So,
of course,
based on your findings, I remember we talked about this also years ago, how the International Monetary Fund, the World Bank, the BIS, and the World Gold Council were outlining exactly this kind of architecture where, again, gold is the underlying collateral.
Yeah, I remember the research that you and Vandell did, and say hi to him for me about the that long uh, article, or it was a huge amount of information that you had found within some of the writings of the IMF talking about this, and opened my eyes to that. And you're right, it is at the highest level. They are preparing for it. And when you look at the central banks buying all of this gold for the last 7-8 years, is there any coincidence, or are you surprised in a bit that gold has done as well as it has? Because no, I'm not. These people are the architects of all of these plans. These
Mhm.
people are the most well-informed traders in the world. Information is worth more than anything.
I
And
agree.
if you know the information, it's like if you ever watched this is a stupid analogy, but the second Back to the Future movie, where the guy had a sports almanac and that showed all the winners of every game, and he went back in time and then became the wealthiest guy ever because he went to the sports books in Vegas and bet all the games and won everything. Well, it's the same thing in essence. It's like, no, you're not going back in time, but if you know the playbook, if you know what the final outcome is going to be, you quietly position when everyone says, why the hell would anyone buy gold? Well, the central
Yeah.
banks are doing it. Yeah. And well, the central banks are right. And they're the ones who write the book and know the outcome. And now you're seeing it happen here in the US, where acquiescing to the reality of that is huge. And I think you're seeing that with the most sophisticated traders in North America as well, which adds an exclamation point to where I think ultimately this is going, and how it will be, as you say, a part of a global settlement system instead of US treasuries.
Yeah. I mean, that's why we've been telling our audience for almost 7 years now to buy gold, really, because a lot of people keep asking me, Versan, is it too expensive to buy gold or is it too high? And, what would you tell somebody who thinks that they missed the move? Because if you look at the evolution of where gold is going, it is, again, reasserting itself as a neutral sovereign reserve asset for the financial system. So when
Yeah,
people
I
ask,
think.
is it too high?
Sorry.
What do you tell them?
I say no, it's not too high, not even remotely too high. In fact, I think it will be multiples of where it is now. And a lot of that has to do with the Genius Act. I think that will help organically via synthetic demand, push the price to the moon. And I have a take on that I want to talk to you about. And
Please.
then you hear a lot of people talking about revaluation of gold. And I'd like to talk about that, the reality of that as well. But all right, so
Mhm.
let's talk about the Genius Act for a moment. I
Please.
I do believe, I mean, my theory that I don't know what people think about it, but I've said it publicly now for a few months, is that if there's any nobility in what President Trump is trying to do, it is to reshore manufacturing. And most people would say, well, that's impossible. Well, let me kind of lay it out. If you'll indulge me for a few minutes, I'll lay
Sure.
out my thesis, and I'd like your input on it. I'd like to know what you think, and stop me at any time. So if we go back to the previous administration, there was the biggest knucklehead I've ever seen in my life, the most humiliating uh, effort to try and explain how treasuries are created from a man named Jared Bernstein. And if you remember watching that on X, it was humiliating.
I remember
Uh,
he didn't know how to answer it.
yeah, at the end, he's like, I don't know. Well, this is the lead economic advisor for the Biden administration. And the one thing that I will say about him is that he wrote a report called Dethrone King Dollar, in which he advocated for relinquishment of the reserve status, that we can't afford to be the reserve currency anymore. There is a economic thesis, and it is called Triffin's Dilemma. And Triffin's Dilemma says, as the reserve currency, you will always have a trade imbalance. Always. It's impossible not to, because the world, if everyone in the world needs dollars to buy oil and to trade globally and for settlement and for collateral, we can't provide enough in the way of dollars to the world simply through global trade. So as a result, we need to export dollars. And in order to export dollars to all of these countries, those countries need to sell their currency and buy ours. So by extension, it weakens their currencies and strengthens ours in relation to one another. And the continual doing of this throughout time makes it so that manufacturing says, well, geez, their currency is so weak in regards to ours. We can send our manufacturing hub to Vietnam or to, to China or to Singapore or wherever, Mexico, you name it, at a fraction of the price. And we'll make a lot more money. And that's why it eviscerated and hollowed out our manufacturing. He's right. Vice President Vance just said the same thing recently. Wrote
Mhm.
about it on White House letterhead. Triffin's dilemma, he said, has been a boon for the consumer. It's kept interest rates very low because not only are all these nations who use our dollars using it for settlement, but they take the excess and reinvest them, recycle them in U.S. Treasuries. Keeps interest rates low. At the same time, it's kept asset prices high, which are inverse to interest rates, right? Houses and stocks. And at the same time, it kept the goods we buy at Walmart and Target really cheap. It's been great for the consumer, bad for the producer. He said, we can't afford it anymore. It's too late. All right, that's premise number one. Premise number two is that if we are going to, and I believe what they plan on doing is tying gold into the system.
Yeah.
Before I tell you how they're going to do that, let's get to the Genius Act, right? So the Genius Act says anytime money moves, right? Anytime money moves at all, it is going to be moved on a blockchain network and via stablecoins, right? One-to-one basis, dollar stablecoins. The primary benefactor of that movement will be a company called USA Tether.
Mhm.
Now, um, American Express will make their own, and MasterCard, and corporations will make their own stablecoins. They'll all be one-to-one to the dollar. But USA Tether is an interesting one.
Yeah.
Their CEO is a man named Bo Hines. Bo Hines was Trump's crypto czar until August, and now he is the CEO of USA Tether, which is already Genius Act compliant. So anytime you move money at all, you buy a pack of chewing gum, you buy a new car, you buy a new house, whatever you do, whenever money moves, it's tied to a stablecoin. That stablecoin will be backed by short-term U.S. Treasuries, up to 2-year duration. This is synthetic demand for
Mhm.
the short-term Treasury. It's synthetic demand to keep interest rates on the front end of the curve low, helps stimulate the economy. It also gives the government money, if you will, through the Treasury. Now, remember I said Trump wants to give the money back to the Treasury, money creation, not the Federal Reserve. This will give the Treasury money creation, right? And so the interesting thing about that, when you move that stable coin, right, and you buy that new car, the stable coin is burned when it gets to the the destination. That's gone now. The interest, that money then, by the way, is deposited into the bank account of the car dealership. But the stable coin that was used to move it was created when the money was moved, and burned when it was received. Okay, stable coin's gone, the money's there, but the interest that was created behind that stable coin because of the treasuries is not transferable. Tether has to do something with that money. What are they
Mhm.
doing?
Yeah.
They've already bought $14 billion in gold. They own more gold than any institution outside of a central bank right now. And they were just at the Beaver Creek Mining Summit dealing directly with the miners. It's one of the largest mining conferences in the world. So now, why would they want to buy gold? Here's the wink, wink, nod, nod part where he says, I think Trump said, this is what we're going to do, Bo. You're going to be set up, but you're going to sell that gold at some point back to the Treasury. We need it. But here's what would happen. If they do this continually, the synthetic demand for the Treasury is covered. That gives the government money to operate, keeps rates low. The interest on those stable coins that backs the movement is not transferable. They buy gold with it. What happens when gold goes higher and higher and higher and higher? The dollar gets devalued more and more and more and more. Remember, we said the dollar's only down 9% against the basket of horseshit currencies, the dollar index, but it's down 70% against gold or more. So dollar is the real measuring stick of the valuation of the currency. Now, if you wanted to bring back manufacturing, Triffin's dilemma says, well, you can't do it. The dollar's too strong. So the first thing we want to do is make everyone no longer want to use the dollar, right? So let's let's impose tariffs on all of our allies, right? All of them, Mexico and Canada and the EU and the UK and Australia, put them all on. Those aren't tariffs or sanctions. But let's give everyone, and let's be incredibly fiscally irresponsible. Spend money like it's just going out of style, right? A trillion every 100 days. Let's have zero fiscal accountability. To your point, want to pretend like we're doing something with Doge. Doge finds 2 trillion in spending cuts. They come up with a couple hundred billion, which is about 30 minutes of spending in Washington. Meaningless. But they continue to not only piss off the world through tariffs and sanctions, and the stick, not the carrot, and the U.S. has lost its mind, and so you push everyone away, right? So that we don't want people to use the dollar. Now, what's happening through the global South, as we talked about? They're all trading their local currencies and settling in gold. They're all building, local central bank digital currencies to trade over some form of a bridge network out, not using the dollar. In fact, India and France just did the same thing. They just worked out a deal where they're trading over their own system, the French system that is not dollar, or excuse me, the Indian system, which is not dollar compliant. It is not dollar compatible. All right, keep going with this. I'm going to connect all the dots. So we can't be the world reserve currency if we want to bring back manufacturing. Now, just as a footnote, we're broke, right? The largest amount of student debt, public debt, auto debt, consumer debt, the debt of as a nation. We're 200 trillion as a nation in debt. Medicare, Medicaid, Social Security, government, military pensions, on top of the 38 trillion. We're insolvent. We're broke. We're uneducated. Ray Dalio just came out and said 60% of America has a literacy rate under the 6th grade. 60%. We're broke. We're dumb. We're in trouble. We don't make anything. If we don't bring back manufacturing, your kids, Versan, and mine are screwed. I mean, they are, because as AI comes in and kneecaps entry-level jobs and a lot of the white-collar jobs, and even if we do bring back manufacturing, what will robotics do to it? But we have to bring it back. We can't be reliant on China for everything from aspirin to aircraft components to military components to everything. We can't. We have to bring it back. Well, Triffin's dilemma says you can't. Well, what if we let go of the world reserve currency? Piss everyone off, push them away through tariffs. Everyone starts to build their own systems, and we push them away. We spend like we're out of control to debase the dollar. Now, even Main Street is talking about the debasement trade, where the dollar gets debased to make it easier to pay off the debt. But what about manufacturing? They are talking about that. We want to bring it back. So, okay, we're starting to lay the groundwork. Tether buys gold. Gold goes higher, 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 higher. When Roosevelt confiscated gold in 33, it was $20 an ounce for the 1 ounce coin. He paid everyone $20.67. And if a dozen eggs were a nickel, 67 cents was a lot of money, right? So then he immediately devalued the dollar by 40%, making gold $35. So the idea is to let gold go higher, 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 organically. Now, there may come a point where it's revalued. And I'll talk about that right now for a minute before I finish the thought process and tie this all together. In most central banks around the world, gold is held in what's called the gold revaluation account. It has been revalued 3 times in the United States, in 33 when Roosevelt did it, and in 72 and 73 when Nixon did it. Nixon closed the gold window in 1970 or 71 at $35. In 72, he devalued the dollar by like 9% and revalued gold to $38. In 73, he did it again, revaluing gold to $42.22, where it stayed since then on the books of the U.S. government, right? James Rickards says, and he's been called to the Pentagon to simulate war games. He says, my number is 24,000, and he uses the M2 money supply into the gold supply. Now, real quick, before I jump off of this subject, every $4,000 increase in the price of gold would give the Treasury general account 1 trillion free and clear. Here's how it works. It's already at 4,000. So if he was right, if Rickards was right, 4 to 24 is 20,000. Every $4,000 increase gives 1 trillion free and clear to the Treasury. That would be $5 trillion. How does it happen? President would say to the Treasury Secretary, revalue gold right now. Treasury Secretary would tell the Federal Reserve, revalue gold right now. No congressional approval needed. They revalue gold at 24,000. The Treasury issues gold certificates to the Federal Reserve. The Federal Reserve has claim on the cash value of the gold. They do not have claim on the gold that belongs to the American people. Here's the accounting gimmick. The Treasury goes, or the Fed goes, bink, and prints $5 trillion just like that, gives it to the Treasury. What does that do to the dollar? Devalues the shit out of the dollar, right? What do they do with that $5 trillion? Whatever they want. Start to pay down their debt. Maybe not issue 10-year treasuries for a while. They start to work down the debt and devalue the dollar, right? Because that we want to pay down the debt and water down dollars. We want to bring back manufacturing. So we're not quite there yet. So we got the Genius Act that's providing the synthetic demand for the Treasury when no one's going to want to buy it when we're this fiscally irresponsible. And it's buying gold with the interest that is not transferable to the holder of the stable coin.
That's right.
So the gold goes up, dollar goes down. Maybe we revalue gold at some point. When would that some point be? Well, maybe it's July 4th, 2026. Why do I say that? Judy Shelton has been on my show twice, once with me, once with Michelle McCory. She's written a book, best-selling book called Good as Gold. She was Trump's nominee to run the Fed in 2016. She wasn't confirmed due to partisan politics, but remained an advisor. She said on my show, people can go listen to it on Miles Franklin Media on YouTube. Andy, in no uncertain terms, Trump has told me the following, that July 4th, 2026 is a massively important day for him. It is the 250th anniversary of the country, and I believe he is going to peg gold to the back end of the bond market. What? Yes, to the back end, right? She's in her book, it says 50-year first, 30, 20, 10, and maybe a 5-year treasury, redeemable in gold. Now, the 50 years, she said, would probably have a 1% interest rate attached to it. And she said all of these gold bonds stable coins would be issued off of those too, to give more energy to the rise in gold and to run the treasury. But she said 1% on the 50 and 0% on the rest, but redeemability of gold. So let's go back. And so the gold starts to rise. Maybe they revalue it, maybe they don't. He pegs it to the back end. You got the front end covered through synthetic demand through the stablecoin passage. The back end, how do you get demand for the bond market to finance our debt? But there's a bigger piece to it as well. And that is you peg it to gold so that the redeemability is in gold, not in interest rates, meaning the more stupid we are with fiscal and monetary policy, the higher the price of gold goes. So if you have a $20 million bond redeemable in gold, by the time in 20 years, maybe that gold is way higher and you only need a handful of ounces to 1 ounce, or 100 ounces or 1,000 ounces to pay it back instead of what it would be today. Price goes higher. The bond is redeemable in gold. But what would that do? What that would do is allow you to bring back manufacturing at zero upfront borrowing costs. Zero. There's no coupon. You bring back manufacturing, you build the facilities, you train the people, and you let gold continue to go up through the stablecoin issuance and through the revaluation to back the back end of the bond market. Redeemable in gold. Now let's put it all together. You have the ability, if you do this, to keep interest rates low, to keep the value of the dollar completely falling, in essence, defaulting on the reserve status, to support the bond market, to bring back manufacturing so that our children and our children's children have a future. If not, there's only 2 ways out of this: hyperinflate or default. The third option is grow your way out of it. Well, how the hell do you grow your way out of it if you make nothing and your populace is stupid and you are massively in debt? You are becoming third world. You're in big trouble, and AI kneecaps all the jobs. So you bring back manufacturing through relinquishing of the reserve currency. That's exactly what Vance said. That's exactly what Jared Bernstein said. Stephen Mirren, who is the architect of the Mar-a-Lago Accord, where did he end up? Oh, that's right. He ended up in the vacated spot at the Fed a few months ago. He was Trump's advisor. The whole theory of the Mar-a-Lago Accord is to devalue the dollar to bring back manufacturing. Now, he puts a greater emphasis on Bitcoin than he does on gold. And guess what? Tether has 7 or 8 billion in Bitcoin as well.
Yep.
The continual purchasing of Bitcoin and gold will devalue the shit out of the dollar, which will make selling your products to the rest of the world acceptable. You can do it. And the only way you can bring back manufacturing without bankrupting the nation is to do it at zero upfront borrowing costs, redeemable in gold. But gold keeps going higher. Every time the dollar moves, gold's going to go higher. So my theory is he's trying to bring back manufacturing at the expense of the U.S. dollar to support the bond market, to support bringing back manufacturing. Now, what is the drawback of all of this? Universal basic income. It will happen because shelves will be empty for a while, prices will be much higher, people have a hard time making ends meet, but he'll stand up on stage. I could see him doing it and say, listen, we have no choice. We kind of are at the end of the road on the dollar. And if we don't do this, there's no future for our kids and their kids. We must be the leaders in manufacturing again. And there is no way to do it unless we just let go of the reserve standard and we find a way for people to want to buy our treasury debt, not run away from it. And the only way to do that is to make it redeemable on a blockchain network, to see it redeemable in gold at zero upfront borrowing costs. Am I crazy, Versan,
No,
or am
you're
I,
not. You are spot on. And this is actually a clip of you explaining it. And I said here, I'm going to read it if people can't see it. But Andy Schectman from Miles Franklin Co. nailed it. Gold revaluation isn't just possible, it's inevitable. I said Trump's team is bringing gold back in, directly tied to stable coins. Of course, I threw in the XRP thing because that's
it's
I think
okay.
every digital trace, I think it does go back to what RippleNet is doing. Whole different discussion. But basically, I said and confirmed everything you were saying, that this is how they're bridging the system with fintech. So I don't think you're crazy. I think you've been spot on for a long time.
And how do you get the gold back, Versan? You tell all of the banks around the world, yeah, man, it's tariffs. We're in trouble. We need the gold back to cover our shorts. And all that gold comes flowing in. And somewhere along the line, the Bank of England says, interesting. Maybe not. So it's now T plus 8 weeks. They start to resist. But they reshort all of this gold quietly, and everyone says it's arbitrage, and tariffs have said the hell it is. They're reshoring it. It's exactly what they're doing. Even Donald Trump's son, on a ad for a competitor of mine, I think it's Birch Gold, he in the damn ad says, my father is prepared to revalue gold. He says it right there. I think they will revalue it. And it's not such a conspiracy theory. As I said, it's happened many times before. Now, who else would it benefit? How about every central bank on the planet? They've all been buying. Are they going to bitch about it? Probably not. They're the ones that will benefit from it as well. In essence, the bottom line is this: three things. One, you save in dollars, you're destined to go broke. Two, you are not a contrarian, you're a victim. Three, every single country in the world, I believe, will start to trade their own currencies and use gold as a settlement structure, whether it be for trade or currency imbalances. And the dollar as being the world reserve currency, the days are numbered. The dollar's not going to die, but its role as being the reserve currency is. And I think that's by design, and in effort to create demand for the treasury, redeemable in gold, so you can bring back manufacturing at zero upfront borrowing costs, so our country has a future. Because if we don't do that, and we are broke, insolvent, uneducated, and AI is going to take over, what do we have left if we don't make anything? Got to reset the game and start by being the engine of ingenuity and production and go from there. And maybe we have a future at that point. If not, it's hyperinflate or default and then reset as a result of it, out of complete and total carnage and chaos.
Yeah, and that's probably why we're setting the stage to invade Venezuela now, for instance. That's a whole different discussion. But I want to touch real quick on the stablecoin market, because it does seem to be misunderstood by most in the crypto ecosystem. What I think is really concerning about it, most people don't realize how dangerous that actually is, because stable coins are inseparable from the dollar framework. So basically, if the dollar keeps losing purchasing power, which it is aggressively, then the stable coins tied to it inherit the structural decline, you could say.
Yeah, stable being backed by a bunch of debt doesn't make sense. Not real stable.
Yeah, I mean, the genius behind it was called the stable coin, right? It's not stable. It's anything but stable.
And the genius behind the Genius Act is calling it genius.
Right. It's so funny. It's comical, but they know what they're doing. This is controlled opposition to ultimately get us to where they've already decided we're going. And what I see ultimately with stable coins, though, there are multiple facets to this, but one of them is a mechanism really designed to funnel traditional finance into the digital ecosystem. And that's essentially giving pressure, like a pressure valve for the United States bond to kind of keep it afloat. And what they've been doing
synthetically, that's right.
Synthetically, right. And they're expanding and contracting stablecoin supply at will. And that is artificially inflating and deflating markets. And what are they doing with all those profits? The very same institutions, they're buying gold, they're buying hard assets, and they're divesting from the same dollar IOUs that they're encouraging the public to hold. And that tells you everything you need to know.
and that's a really interesting way of saying it, and even a better way than I did, and good for you. That's very true. That's amazing. And they also have something very interesting. They have, so I was listening to the gentleman who developed BRICS-Pay. Now, the BRICS-bridge technology is being rolled out to all of the central banks of the world, except for the European Union, the U.S., and and U.K. Sergey Lavrov said, we've decided to open it up to non-BRICS members. Well, they're rolling it out to the Belt Road right now. That's 150 countries and 75% of human population. Now, BRICS-Pay is the B2B side of things. It's business to business retail. So you live in Brazil and you want to buy something in Saudi Arabia, bang, done, and you don't have to convert. You do it on your phone. Or you're traveling from Brazil to EU and you want to, stay in a hotel, boom, on your phone. No, you don't have to go back and forth and switch currencies and all that crap. And it's for retail. Now, the guy that developed it was being interviewed, and he said it's the same type of technology that you find in stable coins. And that's why I bring this up. He says, now, as a side note, the reason I know what I'm about to tell you and why I didn't know and was so surprised at what I'm about to tell you is that the difference between Miles Franklin and a lot of other companies in a world where everyone sells the same product. I live in Florida. I moved here 5 years ago. We've had an office here for 20 years. My oldest friend in the world started it for me when I was living back in Minnesota. He asked me, I want to move to Florida for my daughter, good schools for what she's interested in. Do you mind if I open a satellite office? 20 years ago. Sure, go for it. So, anyways, I moved here 5 years ago, but I left my corporate office in Minnesota because it's the only state in America that regulates this industry, metals industry. We are beholden to the Commissioner of Commerce with a surety bond, with background checks, but continuing education and compliance and anti-money laundering stuff every single year. We have to take classes and get certificates for it. So I'm very well familiar with AML and KYC, anti-money laundering, know your client, right? And so I'm listening to this interview, and he makes a mention of it's the same technology behind the stable coins. And the woman says to him, well, sir, you're opening this up to the Belt Road, 75% of human population, but it's 150 countries. Aren't you concerned about terrorism, that you could be inadvertently funding terrorist organizations? He said, we're very aware and sensitive to that because we're opening up to so many different countries. This technology has AML, KYC, and KYT technology. I'm like, what the hell did he just say? I've been taking these classes forever. Anti-money laundering, AML, KYC, know your client. What is KYT? Know your transaction. So when you talk about also the digital surveillance state,
Mhm.
when you are inside of this system, and everyone says, well, Trump says no central bank digital currency. Fine. This has the same capabilities. If it's being issued by third party, that's what lulls everyone to sleep. But once you are in it, the off ramps are controlled and watched and by the feds, who this stuff has AML, KYC, and know your transaction. They will know who you are, where your money came from, and what you are buying. So yeah, it's the stablecoin thing is a
Mm.
it's kind of, is it the Trojan horse
Yes. Oh,
or
yeah.
not, and then you look at, and the only other thing that I don't like what Trump has done along these same lines, and you wonder, is he the horse or is he riding on the horse? I don't know, is creating the digital ID under the guise of election integrity, and what Benjamin Franklin said, something to the extent of, when you give up a freedom in the name of safety, you never get it back.
Yeah.
Well, that's just it. Now, I agree. You should have to present identification to vote. You need an ID to buy a beer or a pack of cigarettes or go to an R-rated movie. Why wouldn't you need it to vote? I agree with that. But a digital ID to vote, well, is that the foray into the digital matrix, into the digital surveillance system? And then money moves in that direction. Well, don't worry, it's not central bank. No, but the Genius Act has all sorts of legislation on this, and that technology will know who you are, where the money came from, and what you're buying. There are a lot of things to think about
Mhm.
in all of this. And, one of the things that I like about gold and silver, regardless of how it will perform, is that it's asset that's been money for 6,000 years, outliving everything from wars to hyperinflation to the Great Depression, every pandemic, and the biggest money in the world is buying the shit out of it right now and taking possession of it to remove counterparty risk. But it's outside the system. And yes, you may have to reintegrate it into the system to get paid for it or to buy something else someday. But it gives you the ability to sit and watch how things unfold with a little bit of dry powder outside said matrix. Because who knows where this is all leading?
Yeah.
You could drink a bottle of scotch and go down a rabbit hole right here and just have a long late night conversation on what could happen. Throw AI and robotics into the conversation. You wonder, what does the future look like? So I own gold and silver, I own gold and silver because it is wealth. That's outlived everything. And here we are 6,000 years later, and the biggest money in the world is buying it like it's going out of style. To me, that says something about ultimately where we're going.
Yeah. I mean, you and I both know that the system is being propped up strategically, you could say, until the moment they're ready to decide to restructure it. And I believe stable coins are actually going to be a scapegoat where people say it's too big to fail. In fact, that's the most dangerous way to look at this. It's going to be a catalyst used to justify the transition into the new architecture that they've already decided. I really believe
Right.
that. And I do believe that Ripple net is still the end game. That's where it comes into the picture. If you step back and take a look at all this, they've been laying out the groundwork forever on this. And I think I had a discussion with Martin Armstrong off record, and I saw your podcast with him. It was terrific.
He's a
But
cool guy.
he's a great guy. Yeah. I asked him off record about this, and I said, just straight up, I said, Martin, please just tell me what you really think. Started laughing, and he said, the IMF actually has their new digital system ready to go, and they're waiting for the right geopolitical crisis to roll it out. So I think everything that we're seeing is kind of just controlled opposition. They're playing the road to just get us where we need to. And
Talking
digital
about
ID.
playing that road. Oh, I'm sorry. I didn't mean to interrupt you. I'm
No, no,
sorry.
please carry on.
I was just saying that you talk about, it also goes with, starting with the younger people. There
Oh
was
yeah,
just a report that came out 60% of Gen Z says cash is cringe. And I just think, you guys, come on, man. You're just running headfirst right into the complete and total loss of privacy. But it's getting to that point where the cashless society is becoming more and more and more real.
yeah.
Ultimately, we're not there yet, but when the younger generation wants nothing to do with cash, it's cringe. You start to wonder, like, how far off before that agenda is completely
Mhm.
initiated.
I mean,
So
yeah, to your point, I mean, even the recent government shutdown, I don't think that was a political standoff. In fact, I think that was complete BS. It was really an accounting issue. They were trying to cook the books about the economic data because the numbers don't work anymore. So after everything we've spoken about and everything that we see coming, everything circles back to gold because gold is the only collateral that can support a reset without the political baggage, you could say. And this is why central banks are buying gold. This is why the wealthiest people in the world are buying gold and why they're all coordinating these moves behind the scenes.
yes, and let's not forget about silver, just
Oh,
reclassified a
yeah,
critical
for sure.
mineral. It to me, it's the value of a generation. It is the
Absolutely.
complete and total value of a generation. So yeah, I I,
Mhm.
I agree.
Always an insightful discussion with you, Andy.
Dude, I
Thank you
love
so much.
talking with you. It's been way too long. And tell your brother he's on my you know what list for not being here today. I like
Yeah,
it,
well,
talking
we,
to
we
the
have
both
our
of
own
you.
podcast now, and we're really just
Ah,
trying to get as much information out there to the public as we can. So,
I'll tell him I'm
um,
waiting for my invite. But I'd love to come back on. And you mentioned our website. It's very important also if your listeners want our best pricing or answers on any questions that they have heard here, or anything from precious metals IRAs to anything we've talked about here, send us an email at info@milesfranklin.com and let us know that they saw the Black Swan interview, saw me on this show, and we will send them a price list that will be as good or better than anywhere in America. We update it twice a week. If they find better prices from a major company, let us know. Very often we can match it, maybe even beat it. But we've never had a customer complaint in 36 years this next month. And we are licensed and bonded, as I spoke of. Your listeners will not be the first complaint we ever have, but we'll make sure it's a good experience all the way around, not just in pricing, but the entire round trip. We are really good at relationships, and where we're going, I think relationships will be important. So if they would like just to receive the price list, with no obligation, that's great. They want to talk to someone, put your number down. But the most important thing in the subject line, saw you on Black Swan. This is what I'm looking for, and we will take care of it for you. No problem.
Thank you kindly. And for everyone watching, please check out Andy Schectman's work in the link in the description below. Also follow his YouTube channel. It's doing exceptionally well. And he's working very closely with Michelle McCory, and she's doing a terrific job at covering all these developments. So be sure to check that out. Thank you so much.
I think I need to have you on my show next, Versan. I think I'm going to send you an invitation to come on, and I'm going to put you in the hot seat, and I get to ask you all the questions. Be looking for that right after the first of the year. I'm going to have you on and look forward to it.
That would be fun, yes. And I have no filter, and I think that's why a lot of people haven't had me on. I have a very contrary.
I like that, Nov. I like that. Everything about you, everything you've ever said to me, I agree with all of it. And anyways, my regards to your new wife. Hey, man,
I learned the best from you.
You might as well speak it as you mean it. You know, you're very respectful and well thought, well educated, articulate. You got an A+ in my book. My regards to your wife, to your brother, to all the listeners out there, and I look so forward to picking up where we left off not too far down the road, buddy. But happy holidays, happy healthy new year to your family, and let's do it again soon.
Thank you, Andy. It was a real pleasure. Take care, everyone.
See you, brother. You too, my man.